What's up, traders? It's your boy Majesty again, aka the Grandmaster FX, and I'd like to welcome you back. Thank you for tuning in to the demo show here on our YouTube channel, The Exchange SA, your home of currency trading edutainment. All right, on today's show, on the previous episode, I'm sorry for that, but on the previous episode, we started the show right with opening a new demo account, right? And it was a free trial FTMO demo account, right? With certain rules that we have to follow on that account, right? And today we're going to continue the series, but on today's episode, we're going to talk about, the checklist, or maybe let me say the ritual that we go through every single, beginning of the week, right? Before we start trading, okay? And so that, we remember some of the most important things that we do before we start trading. You know what I'm saying? So, let's get straight into it without wasting any more of your time. Right, I'm gonna go straight into it, so we don't make this video unnecessarily long, right? So the first thing that we do every single trading day, right? Every single morning, first thing that we do is see. I go through a checklist. I think we'll do that on the next episode, right? Because you first have to check if my environment is, conducive. Like, I don't want it to be all dirty and clustered and everything, right? There got to be fresh air coming in. You know what I'm saying? My phone has to be not so close by sometimes. You know what I'm saying? Because I don't like distractions, right? But then now that if I'm not home, I use my phone to hotspot my laptop. So I probably might need to get a router or something, right? So there's a certain checklist that we go through before we start trading. And also I have to have my trading journal right next to me. You know what I'm saying? Because I like to write things down briefly as I'm analyzing. You know what I'm saying? So that I know what I'm waiting for, right? I also like to use um trading view, put alerts on trading view, because then it alerts straight to my um um then I like to put alerts on trading view. I like trading view basically because when you put alerts on trading view, you don't just get that notification, you also can get it straight to your phone. You know what I'm saying? On your email, which makes it even more better than, you can live your life and go around, go about your day as you wish, right? While you're waiting for the market to reach your, you know, POIs, your points of interest that you are interested in, basically. You know what I'm saying? I believe that MetaTrader 5 can do that too. The FTMO doesn't have on the free trial. I did not see no trading view on it, right? So we could still use trading view on other stuff so that it alerts us when to take trades, right, on our FTMO free trial account, right? And that's what we're going to do on today's. I mean, okay, that's the checklist that we're going to talk about later on. Right. So we're gonna use MetaTrader, right? You can use TradingView for your alerts, especially in South Africa because of load shedding. I'm using a PC that works on power, right? Need to invest in new phone, new stuff. You know what I'm saying? Basically, everything is like from the beginning, So, our success with the exchanges say everybody that's tuned in from, we're in the beginning now, so you'll see us progress from, from rags to riches, or from the seed to the actual tree, right? So stay tuned, grow with us, you know maybe hopefully one day we'll tell a success story with a platinum plat, YouTube plat, you know what I mean? And maybe like 100,000 subscribers or something like that. You know what I'm saying? We're starting from scratch. I think I got like 13 subscribers right now. You know what I'm saying? The highest views on one video I had was like 8 views, but I feel like restarting everything from scratch before the um you know I get too many views where I can't restart and make things better. I also want to apologize for the audio. I have to, we have to invest in so many things, including video. And audio, I'm sure people want to see who's talking behind the camera. We'll invest in proper um cameras, proper microphones, for audio and for visuals. But so far, bear with me. We're starting from the beginning, Okay, so let's get straight into it. So the first thing that we like to do every single morning before we start trading, right, is go and check the economic calendar, right? So where do I get my economic calendar? There's multiple places, right? But personally, I prefer checking out my I prefer using the Forex Factory, right? Because Forex Factory for me is just, what I prefer to use, right? So the first thing that we do every single morning before we start trading is check our economic calendar, and we go to forexfactory.com/forward calendar, right? And today is Tuesday. It's 4:45 p.m. South African time, right? And we're expecting the news to hit, high impact news to hit at 5 p.m. Right. So we're probably gonna ignore that um and let it run, and we'll see that, we'll see what the market does afterwards. Right. So that's what we like to do. Sometimes we like to, check the calendar ahead, um, and write them down in our journal. Sometimes you could use your Google Calendar, right? It will alert you when there will be news, but I like to write them down ahead for the rest of the week so that I know when to stay off the market and when to be in. You know what I'm saying? When to take profit also, But then what I would suggest you do is check it every single day, right? If you don't have the time to be checking it every single day, which is I prefer in the morning because we trade London session only. We don't like to trade too many sessions. I just trade the London session, and when the London session is closed, I close my laptop. So I don't even want to think about trading. I just want to go about my day, play with the kids, my nieces and nephews, you know, do all the other stuff, read a book, watch a movie, anything, right? So that's the first thing that we like to do. We want to know what's going to be happening in the day on the economic calendar, because these high impact news could really, really bring too much volatility into the market. And sometimes that volatility could be bad, even if you have a stop loss on, right? So this is very important. Um, Another thing that I'm just gonna go through with you guys today is also the Forex market hours, right? The time zone converter. This I use just to, maybe check every in the beginning of the week on Monday only, right? So you could know when your session starts and when it ends, right? Right now we're in Pretoria, South Africa. So I look at, African time zone, I convert it to our time zone, for the sessions, because we want to see what time the sessions open in our time zones, right? And I trade only the London session, right? So I'm in front of my chart I'm in front of my chart at 9 a.m., right? By 8 o'clock, I make sure that I'm done with everything so I can check my charts at 9. So I'm there at 9 when I assumed that it was 9 o'clock when the market opens. But as you can see, the market now is shifted an hour later in our time zone, which is 10 o'clock to 6 p.m. Previously, it was like 9 a.m. to 5 p.m. Right. So we only trade the London session, and the London session in US overlaps from 3 p.m. to 6 p.m., right? So after 6 p.m., I like to close my laptops. I don't like to trade till 11 p.m. or hey, past 6. That's just too much. You know what I'm saying? So we keep it. That's 9 hours. That's enough for us. 9 to 5, 10 to 6. You know what I'm saying? So yes, that's what we do every single week when we start, right? Okay. So now that we got that out of the way, then another thing that I usually do, especially every Monday when I start trading, right? Which is very important for me. You know what I'm saying? I like to read my trading plan. You know what I'm saying? I like to read my trading plan so that I remember, because I know I remember everything every single day. I'm like my rules have been, you know, tatted in my memory. You know what I'm saying? But it doesn't stop me from doing this. It actually helps for me. I believe it helps for us to go check our trading plan. So let's go straight at it. Right. So this is my trading plan. Yours doesn't have to be exactly like mine, right? There's millions of ways where you can use a trading plan. You know what I'm saying? So that you could follow your own rules. Because I believe that if you cannot follow your own rules, then you really need a job, because you need someone to tell you what to do. Because you can't trust yourself, you can't obey yourself, and if you can't obey yourself, I wonder how in the world you're going to be successful at trading or at anything, for that matter. So here we go, right? So we'll be trading smart money concepts, right? In the form of institutional orders. So the first thing that I do every single Monday morning, or every single day, right? But every single day I read my actual trading rules, but every Monday I have to read these, my um, analysis guidelines, right? First, I must check my weekly and daily, right? I must check that, because, it helps you, if you, especially we're day traders, right? But it is so much fun when you take a full percentage, right? And you break it down in maybe 2 or 3 trades. Sometimes you take one in that 1% you break it down to 0.80% and 0.20%, and we swing that 20% and take profit at the last, or the previous swing low or high with the 0.80%, right? So first we check the weekly and daily, right, to determine the definite market trend direction, right? Because we only follow trends, you know what I'm saying? I hate to counter trend, but so when I do that, it'll be on a very high time frame, like H4 daily and so forth, right? um but yes, we start with our daily and weekly to determine the market trend, right? And also we use this time frame. In this time frame, we like to highlight any supply and demand or point of interest in these time frames, right, in gray, because I just like my market clean. You know what I'm saying? Black and white, keep it black and white and clean, right? We use this time frame to establish, support and resistance visible, right, to everybody. And we journal all these important points in our journal, right? And then we move over to lower time frames, right? On MetaTrader 5, we can also check time frames like the H12, H8, the 8 hour, the 12 hour, so on as we go down, right? We use these time frames, right? Maybe I should say, some like H um like let me go. Yeah, yeah, to H4, right? We use these time frames, it's still higher time frames, right, to highlight our supported supply and demand, right, near these near price in gray, right? We use this time frames to establish the trading range, right, that we're going to be using. We use RSI for divergent scanning, right? But you're really gonna see us using indicators at all in this in the exchanges, say, because not to say that there's anything wrong with using indicators, but I haven't found them they haven't really aided me much, or maybe I haven't studied them enough. I used to trade using so many indicators, using divergences with together with um so many moving averages and stuff like that, and I would analyze the indicators instead of actual price. So I just quit that. I don't use indicators at all, right? But I do sometimes, check for divergence scanning, especially in higher time frames when we see that the market is probably gonna change. You know what I'm saying? Especially when I'm seeing like a Wyckoff schematic, right? So in these time frames, we also look for order blocks, right, with imbalance at important areas in this market, right, and on that particular pair or asset that we'll be trading, right? In this time frames, we use them. Well, our road we use to spot wake off levels and developments. But remember, time is fractal. You'll find wake off in any of these time frames. You can find wake off at the minute, all the way up to the monthly, to the yearly. You know what I'm saying? So yes, but also, on higher time frames, I find them to be a bit more um visible, and easier to identify and to spot and to understand, you know what I'm saying? But it takes years of practice, to be honest. We're still working on mastering that, right? Mastering, I don't even actually, to be honest, no, I don't. I just follow, structure. I don't really like to want to label wake off because I usually um I'm successful at labeling wake off once it has already developed. Like after I see the sign of weakness, that's when I'm like, okay, maybe this looks like a distribution or an accumulation, right? If I see a sign of weakness or a sign of strength, or basically after the markup or the markdown, right? So yes, and don't forget to journal important discoveries and points, right? So and then we move down to lower time frames, right? And in these time frames, we use them to establish our trading ranges, spot intraday, previous days high and lows, refine our order blocks and journal our observations. Remember, I wrote these for me, you know what I'm saying? And I keep reading them because it keeps reminding me, even though that I already remember, I just don't want to. And I keep refining this trading plan, right? I keep refining it, the more and more. It used to be longer, it used to be bigger, like it used to be longer for real, but I keep refining it because some things um keep revealing themselves, and so the more they reveal themselves to me, the easier it becomes for me and for us to trade with them, right? So we follow these analysis guidelines to find high probability trades and trust the process, right? So my trading rules, right? So these are my basic, you know, simple trading rules that I follow, and they help me stay profitable and stay away from, losing too much money in the market, because everybody's gonna lose. Everybody loses in this game, right? It's part of the game. It's like playing Modern Warfare. You everybody gets shot. You know what I'm saying? Everybody gets shot. I don't know if there is I don't care if you're a pro, you're playing Modern Warfare and Call of Duty, you gonna get shot at least once. And one bullet is gonna hit you, definitely. You know what I'm saying? That's how you find out where the bullets are coming from, right? So our trading rules goes as follows. We read this every day. I read this every day. In fact, the reason why I read this every day is because here in front of my desk, right on, in front of right behind my monitor, there is, I have these trading rules on the wall there, so I read them every day. You know what I'm saying? After my checklist, the checklist reminds me to read my trading rules. It also reminds me to read my definite chief aim, from Think and Grow Rich and stuff like that. Right. So we read this every day, and we remember to risk only 1% a trade, right? And 2% maximum daily. We don't allow ourselves to lose more than 2% a day. That's me. Maybe you have a higher risk tolerance, so you can risk maybe 4, 5. You know what I'm saying? But we don't allow ourselves to risk more than 2% a day, right? Never allow ourselves to risk more than 4% maximum in a week. So if you lose 4%, whether it is on Monday for that rest of the week, I'm going to keep my charts closed, right? So I can kind of forget, detox it out. You know what I'm saying? Because I don't like to trade after a losing streak. Because after a losing streak, when you force trades, what happens is, you're stuck in that emotion, in that mindset of those losing trades, and you're trying to, you end up revenge trading, and that's terrible. That's terrible, terrible, terrible. So we don't do that. If we lose more than 4% in a week, we don't trade anymore for that the rest of that week, right? Um, well, I used to only trade Euro USD and Nasdaq alone, right? But I want to change it and say that we will trade the pairs with the highest probability setups. But I feel like, for this challenge that we're doing for the demo show, I'm going to focus only on these two because I don't want to keep switching from pairs and all of that. Sometimes too many assets is kind of a problem, because if I only trade twice, 3 times a week, and those are profitable trades, that's okay. You don't want to be trading every single asset on the in the market. Now you lose concentration. It's bad. Multitasking is really, multitasking is actually setting yourself up to do terrible at multiple things at once. You know what I'm saying? So narrowing it down and focus, like Earl Nightingale said, focus. That's the science of achievement, right? Right. Only higher time frame directional buys. Right. I know that time is fractal, but we only follow the direction of the higher time frames, right? So that we could, maximize on our profits, and on higher probability setups, right? So we're going to discuss every trade. Sometimes, I might be away and unable to discuss and unable to go through the trade before we take them. So what we will do is I'm always going to come back, and I'm always going to explain why we took a trade and why we did good or bad. If we got stopped out, I will always make sure that I leave. We check, and I'll be discussing every single one of them, every single one of the trades that we take. You know what I'm saying? Because I'm sure for a fact that we won't be trading live all the time, right? We're also using pending orders, right? Your buy limits, and I mean your limit orders and your pending stop orders, right? So we'll only instant execute when necessary, right? Because sometimes, yes, you see the market, it comes in and you just can tell that, because remember, some of the old school basic um trading rules that we used to use back in the days, that we learned from maybe your candlestick trading bible, or those first things that they actually do help, like your engulfing, as long as you got your everything is aligned, and you see that the market is has given you everything that you needed, it actually take the trade, and you cannot wait for it to come back, right? Using strict management rules, right, you can allow yourself to instant execute. I don't like to instant execute because I've been more successful using pending orders than I have using instant execution, because when I'm instantly executing on my trade, sometimes it feels like I'm reacting to FOMO, or the fear of missing out, and I don't like that. You know what I'm saying? Remember, there's millions of opportunities in the market. Maybe not on that specific day, but throughout. You know what I'm saying? Maybe the next day, the next week, the next month, there will be thousands of opportunities. So when you miss one, you let it go. Why are you trying to chase the market? Like, that's just setting yourself up for failure sometimes. You know what I'm saying? Most of the time. You know what I mean? So yeah, if you miss an opportunity in the market, hey man, it's cool. Just keep following it. It's probably gonna give you more um opportunities in that specific range. You know what I'm saying? So don't worry about that. We use second mitigations only, right? When we have I'll explain that as we go, right? So second mitigations only. We like OBs that have imbalances, right? Or gap with, a change of character and an extra break of structure, right? That's another form of wake off. You know what I'm saying? You don't want to be stressing yourself trying to label, not knowing how. Like me, honestly not that much a pro at this wake offing thing. I just look at it using, your order block with imbalance or the gap, plus the change of character and BOS, the break of structure, right? In the direction that you in the higher time frame direction, basically, right? We like to also use our 50 to 61.8 Fibonacci levels. I'll remove all the other levels, right, except for 0 and 100, right? Or 1 and 100. I don't know. Okay, 0 and 100 basically. And I keep those and 50 and 61.8 only. You know what I'm saying? And your negative 0.272 level, right? For yours, if you want to swing trade. You know what I'm saying? But we usually love to use structure. I just use structure. I use these to for your correction levels. You know what I'm saying? Retail confirmed trust support and resistant levels also. I like to hear a lot of smart money concept traders say that, speak badly about support and resistant levels, but like they're important, because if you can see where they are, then you can see where most traders are going to be reacting, where they're going to be putting their stop levels and their stops and their orders in the market, right? And usually you see that, like, it's with experience, you notice how your order blocks are built around these areas, your supply and demand are built around these areas. They take them out, right? Most traders would complain and say that it's manipulation, whatever it is. They take them out in the form of liquidity grabs, and create those beautiful point of interest. These are point of interest, basically. You know what I'm saying? And that's where you'll find your liquidity grabs, right? Sometimes in the form of double tops and double bottoms when they're taken out. You know what I'm saying? That's where we find most of our beautiful orders. We follow the trend. Yeah, I should that this should be, in the beginning there. Only follow the trend. Like, this is very important. I cannot emphasize this enough. You know what I'm saying? Because friend, the the trend truly is your friend. You really want to follow the trend. You will save yourself a whole lot of stuff out if you follow the higher time frame trend, right? Strictly higher time frame OBs, right? Yes, I know time is fractal, and you can use order block. I do trade the 1 minute time frame as well. You know what I'm saying? But it's usually, if I'm taking a lower time frame OB, it is within that higher time frame point of interest. Never just in J, out of the blue, and I see an order block that looks good and I just take it. You know what I'm saying? It has to be within the framework. You know what I'm saying? So we screenshot every single trade. We'll be doing that also so that we can talk about it, right? So you screenshot these for your journal, right? We're gonna use the really, guys. Journaling is very important. If you're still too lazy to journal, then you're kind of, to be honest, it's kind of like you don't want this enough. You don't really want to trade. You want to make money. And the only people, I think it was Jim Rohn who said, the only people that make money work, well, well, he said in the mint. We'll say in, okay, I don't know which, the Reserve Bank, because that's who those are people that make money, right? They printing money, the banks and stuff. So if you don't, like, really, you have to, if you're not journaling your trades, man, you are stabbing yourself, shooting yourself in the foot. You know what I'm saying? Like that character in 8 Mile. You know what I'm saying? So yeah, you gotta keep journal. You must journal, people. Journaling is the beauty of it. The reason why very few traders are actually um consistently profitable is because very few traders actually do journal. When you journal, you get to see what you're good at, which trades are, work for you. Um, you get to understand yourself, your emotions, your psychology around taking a trades. which trades work, which trades don't, and you won't know that if you're not journaling, right? For real, for real. So, well, I've been going against this rule quite a lot. Okay, not necessarily a lot, but yes, we really don't take. I do sometimes take a lot of losses, or I do take losses from disobeying this rule, but also I do miss a lot of beautiful trades, right? Because of this rule, never take equal highs and equal lows. Um, um, so I have the reason why I would remove it is because of these strict rules, these over here. This rule over here saves me a lot of that, order block with imbalance. You know what I'm saying? And around that schematic in that higher time frame order block while following the trend. This saves me so that I don't make mistakes in areas like these. Right, right. Oh my God, I just moved it. Okay, I'm just gonna leave it. Right. Also, don't mess around with your stop loss. Yeah, that's a rule that I have. I don't know if it's something that I want to talk about on this show, but yes, what we like to do sometimes is when you see price moving up, you just like to break even immediately, right? Move your stop loss up, and you find that price wants to come back, make a correction, and even mitigate that order block again, right? And then continue on further. You know what I'm saying? So when you're messing around with the stop loss and was bringing it up to break even, taking it down sometimes when the market is going against you, let it hit if it's hitting. You know what I'm saying? Let it hit. If you're wrong, you got something to journal. You're actually gaining more than losing. You know what I'm saying? So don't mess around with your stops unless um unless you have to. Like unless your first level has been broken up or below, above or below. You know what I'm saying? And then now you can actually, break even. You know what I'm saying? And you gotta respect the trend, my people. The trend is your friend. Remember, I'm gonna keep, the trend is your friend. Respect the trend. Try to not go against the trend. If you feel like if you feel like you can't wait, you don't have the patience to wait for the market to tell you what it's doing, and you wanna, like, you can't wait for the market to maybe pull down to your or up towards your point of interest, and now you want to go against the market because it's going towards your point of interest, and you feel like it's taking forever to get there, and you want to go trade towards it. You know what I'm saying? Then maybe look at another pair. Look at another pairs somewhere where you'll find something that's going within, you know that's going with the trend that you could, rather trade on than actually risking losing money by not following the trend. Follow the trend. Also, don't be greedy. Don't be greedy. Don't be greedy, man. Taking a 1%, taking 1% profits is not also bad. I know it ain't like you gotta aim big, of course. You gotta aim big. You gotta aim large. A small time thing ain't working for most people. I know. But honestly, my people, be grateful for your profits. As you grow in the long run, right? If you, let's say, you're trading for an entire month, or you're checking, like, to check your consistency, these small profits add up to large profits at the end of the month in like 30 days, in 4 weeks, in 12 weeks or so. So trust me, be grateful for all profits. Do not always try to be taking 10%, 100. Yo, like, really, that's greed. Greed is good, but in this sense, it's kind of bad. The fact that you're learning how to trade is good greed. You know what I'm saying? But trying to get too much from the market is also bad because you end up you're opening yourself up to getting shot, to losing. Sometimes you got to relax a little bit. You have to have fun, my people. You know what I'm saying? Have fun. We only use RSI, or you could use MACD or whatever, but we only use the RSI for scanning divergences at points of interest in the market. And don't be the most important rule. You know what I'm saying? Don't be too invested in any position emotionally. Take your trades, trade, and do all of that, but don't be invested in any. You will be if you were taking, like, you're risking 10% or 5%. That now it kills the fun. It kills the fun. So don't follow risk management. Risk 1%, 2% a trade maximum. Risk only what you're okay with losing. You know what I mean? So you stop yourself from being too emotionally involved in any position. This is supposed to be fun. You know what I'm saying? It's supposed to be fun. I took this from a book, right? So I'm sure, you can pause and read it through. You know what I'm saying? This will help you. I'm not gonna really go through it. I just did it for this video. So yeah, my people, that's what we do. You know what I'm saying? Create your own rules. You could copy this as well. Yeah, and that's how we do it, my people. And then on the next video, today we kind of were a bit too busy. We were busy making on other videos, editing and all of that. So we kind of stayed out the market for a little bit because we're starting this series. You know what I'm saying? So, that's what we do, my people. Tomorrow, hopefully, we'll get proper opportunities so we can discuss how we trade and how and everything, right? And maybe catch a trade um online. You know what I'm saying? Live. So yes, that's what we do, my people. Thank you for tuning in. This your boy Majesty, aka the Grandmaster Effects, and I am really grateful for everybody. Please don't forget to hit the like button, subscribe to my YouTube channel, hit that notification bell. And yeah, man, thank you very much. It's been a pleasure.